Hello. Hey guys, welcome to the 1 o'clock webinar we're going to have today on helping your family build business credit. My name's Scott. I will be filling in for Ty today. Any questions, please post them on the chat, or you're welcome to shoot me an email at scottkurkowski@creditsuite.com. So we're going to go ahead and get going. The presentation shouldn't take too long, but there's some points I think that should be noted on here. So family helps family. It's only natural to want to help the ones closest to you. If you're a child or another loved one owns a business or wants to start a business, you may be wondering how to help them build business credit for that business. You can definitely do that, but there's a right way and there's a wrong way to go about building business credit out. First, let's talk about business credit. You know about personal credit. You know it builds passively almost on its own. You open credit cards account, pay responsibly, and build good business credit, right? It doesn't quite work that same way with business credit. Business credit's a little bit different. You have to intentionally work to establish a business credit profile and build a business credit score. It's a process that has to be done in an order. So there is an order to the assembly of that, and we're going to go over that. There are ways that you can help your family members through the process if you want. Let's touch on the right ways and the wrong ways to go about building business credit. As mentioned, there are some right ways to do this and some wrong ways. There are some legitimate ways to help your family build business credit, and there are some very unethical methods. Unethical ways to help your family build business credit is buying business trade lines that can be highly unethical but very tempting. It's also fast and easy. There are many companies online which promise to sell seasoned trade lines. If your company has poor or little credit, you can pay a lot of money and seemingly end up with a great credit score instantly. However, you may be tempted to help the family member by pay the company to do this. Their name will be associated with the account of someone with established excellent history. New business owners can seem more creditworthy, and they really are, but the FBI has found that these companies can be fake, and the primary cardholder can be a stolen identity in these kinds of scams. What does the FBI say? When commenting on a 2013 bust of a fraud ring, a second kind of trade line, the authorized user trade line, where a credit card holder adds another so-called authorized user to the credit card account, this raises the credit score of the authorized user who inherits some of the primary user's credit history. Although in those cases, though, when you are an authorized user, you're not writing off on the financial liability that is for the primary and the co-applicant. Some defendants created and sold fake lines of credit for false identities made up by other defendants. These fraudulent primary trade lines were then used to increase the credit limits on fraud cards so the defendants could re-app even larger profits. Defendants used authorized user trade lines to create new identities. You can read more about this specific bust. The FBI makes their stance on companies very clear. So here's a link here, and I can send this over to anyone who's interested in reading this. The leader of the scam ring was sentenced to 80 months over 6.5 years in prison in 2016. This is definitely not a good way to help your family members build business credit. Piggybacking a trade line is unethical as well. Piggybacking trade lines is almost a practice involving seasoned trade lines. A creditworthy borrower's accounts are used to the borrower adds the third party as an authorized user of his lines of credit, but he or she does not actually provide the third party with credit cards or account numbers to let them make changes against the account. The authorized user never actually uses the credit whatsoever at all. You may be tempted to let a family member piggyback on your credit, but again, it's not something that we would consider ethical, and you could run and face some problems in the future. The benefit to a third party is an improved credit rating. It shows they are already approved for a higher limit revolving accounts. In theory, showing you already have credit is supposed to make you more creditworthy for higher limit accounts. Many companies claim to be able to secure 100,000 and 250,000 in credit lines once these accounts are reporting. This is dishonest. Even if it's your own credit you're allowing a family member to piggyback on. Note, a personal credit is different, and this is considered a legitimate practice, but only for personal credit. Legitimate ways to help your family build business credit. You can sign as a guarantor of a loan. Of course, a loan can become a guarantor loan. This simply means you have someone signing the loan, agreeing to pay if you do not. It's a great way to get the loan if your credit isn't great, and it's one of the major ways to help family and friends fund a business without actually giving any cash yourself. Few things to note about the guarantor loans. If you sign as a guarantor, you'll be responsible for the loan if your family member defaults. This will not help build business credit with EIN per se, but it will affect the personal credit, which is sometimes included in the calculation for a business credit score. If things go south, your own personal credit could be affected negatively. It could also increase your personal debt to credit ratio, which can also negatively affect your personal credit score. Let's touch on a little bit about the credit line hybrid program. To avoid the negative impacts on your personal credit by signing as a guarantor on the credit line hybrid, business owners can use it to fund the business as a loan or in conjunction with another funding option. Cash from the credit line hybrid can be used as a down payment on another loan, or it can be used as working capital. We have a lot of requests for the credit line hybrid program, especially for startup companies that are looking for working capital and are struggling to find those means. So credit line hybrid program is a great resource and can be utilized with a guarantor. A minimum credit score of at least a 680 is required, but like anything else, the 680 is the minimum entry level. My feeling and my opinion on that is if you're at a 700, 720, 740, 750, your odds of getting much higher lines of credit or much higher credit cards with larger credit lines, it's much greater than it would be going in at the entry level amount credit score of 680. If your family member does not meet that and other requirements, but you do, you can sign as a credit partner on the credit line hybrid. Other requirements include no more than four credit inquiries last 6 months, less than 45% balance on business and personal credit cards. Typically, the 45 is pretty subjective. Nowadays with COVID and banks looking at things a little bit more closely, I would really aim for being below 40% for your revolving debt. In this scenario, you can help find a family member get funded, get the funds they need. You'll have no cash outlay unless they default. Your personal credit is not affected in any way. They don't have to hand off the percentage of ownership in their company. And since these accounts report to the business credit reporting agencies, they build your business credit score, which exactly is the goal. Benefits of using the credit line hybrid. This means by signing as a guarantor of the credit line hybrid, you actually help in two ways. They get funding that they need right now, and they also get the help of building business credit scores because these payments are reported. Everything that revolves around the business credit is based on your businesses or your family members' businesses on how they perform making their payments back to vendors, lenders, and financial institutions. When you have a family member build their business credit score, you're also helping them build fundability. This works two ways. The things you have to do to establish business credit profile are the same things you have to do to establish a foundation of fundability. Beyond that, business credit is the biggest factor of over 100 factors that affect the overall fundability. A lay of foundation and fundability establish business credit. A business has to be set up to be fundable entity on its own, separate from its owner. That takes some intentional thought as to how the business is structured. A business credit expert is a huge help with this and more. Help your family build business credit with a score business credit expert. This is the best thing you can do for a family that needs to build business credit with the EIN by helping them connect with a business credit expert. You provide them with someone who can help them navigate the complicated world of business credit and fundability, and to guide them through the process the most efficient and effective way as possible. Again, I mean, I think there was some analysis done, building fundabilities and building the business credit out on your own. There's a lot of obstacles that you need to navigate through. And what Ty's done over the past 8 to 10 years has just been incredible in the way that we can move people through the business credit building within 6 to 11 months, when on an average it could take 2 to 3 years, especially if all the fundabilities aren't correct. We've literally had $1 million companies get declined for one of the fundabilities missing, like being linked or registered to the 411 directory, as that's one of the first ones that the vendor accounts will call to legitimize the company. A business credit expert can help set up the business to be fundable. Again, before a business can have a separate business credit reporting, it has to be totally separate from its owner. There's a very specific way this has to happen, and the business credit expert can help ensure this is done correctly. This means having a separate contact information, having an EIN. You must incorporate to be truly separate. LLC, S Corp, corporation. Sole proprietorship will not work for building business credit, or you can probably build some of the fundabilities, but as you get deeper into building business credit, a sole proprietorship, they're going to ask you for some sort of personal guarantee as leverage. A separate dedicated business bank account, that is a must. A free Dun & Bradstreet number, you will absolutely need that to build business credit. Incorporation can be either an S Corp, LLC, or corporation. Any of those things will work, as I just noted. Typically, it's up to you as the owners or your family member as the owner and which one they decide to on board with, because each one, there are different tax restrictions, and we can maybe be able to go over that in another webinar with you to talk about those. The choice will depend on your budget and liability and protection needs. It's best to discuss this with an attorney or a tax professional. When the business is set up this way, business credit profile will start to be established. When accounts report on time payments to the business credit reporting agencies, the business credit score will grow. This will open up more funding opportunities, so an owner does not have to rely on friends and family. A business credit expert can analyze the overall fundability and guide the owner in increasing the fundability of their business. Even after a business is fully separated from the owner and has an established business credit profile, there will be no business score without accounts reporting. The problem is very few business credit accounts report, and those that do not make the fact common knowledge. Business credit experts know which accounts to report and what they require for credit approval. I always go over this during my consultations. There is an absolute order to the assembly of business credit. Only 7% of the banks, lenders, and vendors report back to business credit. And out of that 7%, just a handful report to all three reporting agencies. So when you're onboarding with the program, those specifics are going to be open to you and what the eligibility requirements are for each one of those accounts. But it's going the actual system itself guides you in a way so it builds an incredibly strong foundation in building the business credit out, especially when you know what vendors, lenders, and financial institutions, what reporting agencies they report back to. They can guide businesses to the right accounts for them. This way, business owners do not waste time with accounts that do not report or they do not qualify to get funding. Again, pretty important. Know who you're applying to. Know if they're even going to report. There's a variety of accounts that we put on the site for you on our business credit builder to show you those particular companies that either ask for a personal guarantee or they just simply don't report at all. But the core of our program, every tier is built in, so it shows you who it reports and when you should apply and who that reports back to. Establishing and building a business credit score is important for a number of reasons. First, it can help gain access to more business funding, but also it can help protect the owner's personal credit score. If a business isn't successful, the owner's personal credit doesn't have to suffer. That's pretty big. I mean, last year when the pandemic hit and everyone was looking to try to get the EIDL loans and then the PPP rolled out, one of the number one problems that I saw is business owners had such high utilization on their personal credit. In a lot of cases, their loans were either declined or they got very, very minimal amounts in the EIDL disaster funding. I'm not saying that's exactly right, but there's a point in case that it shows that when you have high utilizations, you're revolving 50, 60, 70, 80%, up to 100% utilization on your personal credit cards, it drops the scores tremendously. And still a lot of banks, they rely on business credit, but they still always want to see the personal credit and see how the individual is performing. So again, using business credit that only reports back to the EIN, you're protecting yourself as an individual from the utilization, and also if something goes awry with the business, you're not affecting you as an individual, your personal credit. They can maintain the ability to buy a home or car insurance using personal credit. So yeah, of course it opens up, when you keep your personal credit in good standing, it opens up the flood doors for other loan options, mortgages, car payments, things of that nature. This is why it's so important to help family build a separate business credit, but you have the help. Have to help them the right way. So buying trade lines and piggybacking off of other companies or people there's too many scams and too many things out there that could just go wrong quickly and get things started off on the wrong foot. And that's what you do not want to do. If you do it the wrong way, you could both end up in a lot of trouble. There are no shortcuts in building business credit. I mean, there's one shortcut that's using Credit Suite. And what I mean by shortcut is we're going to show you the right way to do things. We're going to show you how to set up a fundable company. We're going to show you the tiers of building business credit because there's an order to the assembly of it. Typically with business credit, you just can't willy-nilly and apply for who you want to. So we're going to take you through all those steps, make sure it's built out correctly, and this can be done within about 6 to 11 months. It's noble to want to help family build business credit with an EIN, but there are right ways and wrong ways to do it. You should never pay for trade lines or allow them to piggyback off a good credit. It would be more helpful to sign on as a guarantor of a credit line hybrid program. Again, the credit line hybrid program has been extremely instrumental in helping a lot of small businesses get the loans they're looking for. A lot of people, I get a lot lot of phone calls every day. Say, hey, how can you help me out? How can I get this loan? They don't have any revenue. Revenue hasn't started yet with their company. They're just getting their, their company off the ground. The credit line hybrid has been extremely impactful in the sense of that you can be lined up with 2, 3, 4 business credit cards to help get the working capital that you need to get that company off the ground. Also, while creating, building business credit in itself. So it's an excellent way. If anyone wants to look in that, feel free to call us anytime. We'll love to talk to you about the Credit Line Hybrid program, as well as helping you build out, or your family members build out the credit the traditional way through our core program, and help them access the guidance of a business credit expert, which is who we are and what we do here. It's notable to want to help the family members, but there are right ways and wrong ways. Okay, so went over this, and you can contact us today for more information. Give us a call at 877-600-2487. Feel free to give me a call anytime. My name's Scott Krakowski. I'll be happy to go over the Credit Line Hybrid program with you. If you have questions about building business credit and you need my help and you're stuck, a lot of people get stuck. At the beginning, they miss the fundabilities, or they listen to one of our other webinars and we talk about the vendor accounts, but hey, where do I go from there? Give us a call. We'll be happy to help you. We'll be happy to help you and teach you more about how to get the business credit built out and get it built out quickly. I want to thank everybody for attending today, and if any questions, again, give us a call, 877-600-2487. Have a great day, guys. Talk to you soon.